Hey traders, it's John Fortune here with this week's weekly Forex forecast. Hope you'll have a great weekend. Last week we had CPI inflation data out of the US, and as a result we saw the DXY starting to break below the 2-year breakout level and the 7-year breakout level. Now going into next week, because of this, risk on sentiment still looks to be pretty strong, and the setups that we're going to be looking at in the best pairs this week do favor risk on coming into the markets next week. Okay, so quick look at the economic calendar. The data that came out last week that was important here was the CPI. It came out at consensus, so inflation coming down, and a very slight beat in the month-over-month CPI for December, actually showing slight deflation. Now, alongside that, what we also had was unemployment claims. So you've got your inflation job. That's a dual mandate there, full employment and controlling inflation or price stability. And on the other side, unemployment claims were a beat. So traders were looking at this almost as a kind of Goldilocks release, because you've got inflation coming down and the jobs market is actually stronger than expected even in this case. So because of that, we did see the dollar selling off a little bit. We are still seeing risk on in the markets, and going into next week, the forwards looking data that we're running here for you guys is suggesting risk on setups as the best plays next week. So very quickly coming into this week, it is a bank holiday on Monday, so I don't expect too much to actually happen on Monday. I think generally speaking, the markets are going to just move sideways, as often is the case with a US bank holiday. However, for the rest of the week, it's the CPI data out of Canada that is likely to move the Canadian pairs. And also the big one this week is the Japanese interest rate decision on the 18th of January. Now, why is this very important? We also have core PPI coming out of the US, but actually it's really the BOJ is the one piece of data we need to be focused on next week. Why? Because for the first time in a long time, the previous BOJ meeting actually moved the markets. We saw policy change when they increased the upper bound of their yield curve control, 0.25% to 0.5%. And because of that, it means we do now, after quite a long period of BOJ meetings being pretty dull and non-eventful, we do have to pay attention to these interest rate decisions once again out of Japan, as BOJ policy has started to shift somewhat. Okay, so looking at the scores for the coming week, and what do we see here? Well, first of all, we see the US dollar on a week-over-week basis. Looking just at the majors data here, it is projecting on a forward-looking basis to continue to be weak for the time being. So a lot of you will know my view is that this year, I do think we see risk off coming back into the markets. And I do also think something is likely to break at some point in this year. However, it's not about being dogmatic. We need to follow and trade what the data is showing us. And then if further down the line, the data confirms that view, we can start to trade that view as well. But right now, the data is clearly pointing to continued risk on, and that is what I favor going into next week. So US dollar weakening, this is a risk on signal. The pound strengthening, somewhat risk on. The Japanese yen and the Swiss franc weakening on a 4-week rolling basis, risk on. And the Australian dollar on a week-over-week basis jumping up 2 points is risk on. So all of this is suggesting risk on is likely to come into the markets next week. And unless or until this data changes in the other direction and starts to tell us 4 weeks out that we should start to be looking for risk off, we should be trading in that direction short term. So going into this week, I do like as my favorite pair here of the majors, franc yen to the downside. I also like euro franc to the upside. We're also going to be looking at US dollar yen to the downside. We're going to be looking at euro dollar to the upside. And also we can look at some Aussie strength plays vis-a-vis the dollar, and also the Swiss franc are the markets that I like the best heading into next week. Okay, so quick look at the individual currencies. We're looking at this just on the daily chart, just for a kind of bigger picture view of what's going on. The dollar has started to break down below its 7-year and 2-year breakout levels. Now, is this significant? Well, not really, because of the size of the consolidations of the breakouts. If you have a 7-year breakout, which looks something like this in the bigger chart, for example, and the market breaks higher, as it has over here, pulls back and retests, what you're looking at here on a daily chart is nothing more than, as it currently stands at least, just a little bit of volatility. This could just easily be, I mean, you could have the the dollar coming down over January and February even, maybe even the first quarter. Let's say the dollar just comes under here for the first quarter like this, and then rallies over the back end of the year. Well, on a yearly chart, all that would be the lower wick of the yearly candle before it does something like that. So when you're looking at 7 or 2 year breakouts, you have to also compare the time frame you're looking at it on, because what you're seeing in the daily could actually look like a substantial break lower, just like over here. But in reality, because it's a yearly breakout, you know, on the bigger picture charts, this could just simply be the lower wick of a candle which closes on a 3-month or 6-month basis back above this level. So as it currently stands, yes, I am bearish the dollar. I do think we could see the dollar coming down a little bit further. However, I don't think what we're seeing here negates the 7 or 2 year breakout just yet, because of the fact that this is only essentially 1 day below its 2 year breakout, which in the grand scheme of things is absolutely nothing. We should be considering this just a little bit of near-term volatility around the major breakout levels. Next is the euro, just simply doing the opposite of what we just looked at in the dollar. We are above the major 4-year, 7-year breakout levels as well. And I do think if you look at this, we are kind of consolidating here, then we break out with some momentum. So I would not be surprised to see this coming back, maybe even coming up again for another high, maybe even another couple of highs before we start to see this rolling over. Maybe it doesn't roll over. I believe at some point very soon, this market is likely to roll over to the downside, but next week is not the time to be playing that position, in my opinion. Next is the pound. In the bigger picture, we've come back and retested the top of the flash crash, which is very often, as I've been saying in previous videos, what happens. And that was actually the first one we looked at, the flash crash, but this is the bigger weekly part of the flash crash, which we came back and retested. And we're in a consolidation area here, which you would say, if this were to continue, this could be building what's known as a cup and handle or an inverse head and shoulders. Now, for this to break higher and for this to enter a third wave, you would think that you would need very favorable macro backdrop, or let's say you would need to have a very fundamentally bullish case for the pound, which when you consider its current rally from the lows in the face of continued tightening around the world from central banks, it does seem to me that this could consolidate, maybe even test the high, but I think we're probably going to get a failed breakout before this continues lower. This is my base case, but again, does that mean I'm going to be selling the pound versus the dollar next week? No, I am bearish on the dollar next week. Next is the Swiss franc. Now, the Swiss franc going into next week is actually my favorite short. And technically, you can see we've broken out and we're consolidating above the major double bottom breakout level. So what we may see is we may see the Swiss franc coming down, testing, and just continuing to consolidate. And if other markets are rallying in the same time frame as this consolidation happens, you will see an outperformance of those markets versus the Swiss franc. So nothing here technically tells me that the overall picture of a bigger Swiss franc move this year has failed. But near term, we do need to be considering that risk on sentiment, which, as I said, remains quite strong. Next is the Japanese yen. Now, this is a market I've been bullish on for quite a while since we reversed breaking out over here with momentum, consolidated and continued higher. We are now coming to test the major breakout level, which has been on here since last year. And going into next week, I do favor still further upside in the Japanese yen, and it is one of my favorite long plays. Paid very nicely last week if you're involved in those yen pairs to the downside. And again, I do like the Japanese yen this week. Next is the CAD. Now, the CAD is currently in a large consolidation, which looks to be a big A, B, and a C. And if we take the Canadian dollar as a reference for near-term risk on and risk off, this actually depicts quite nicely what we could be seeing and when we could be seeing a shift back to risk off. So if you look at this as it currently stands, this should be treated just as an A, a B, and a C, which is a bigger corrective move in the context of a larger downtrend. And so if this was going to come up and test the high of the A, that would actually fit quite nicely with near-term risk on. That shows me that, yes, we are likely to see some near-term risk on. And then how does the Canadian dollar react at this level? Does it break with momentum, which would be a sign actually of a trend change? Because the moment we take out this high, this is actually a new trend to the upside. So the question then becomes, is this a secondary trend, i.e. a correction, or is this a primary trend, i.e. a reversal? Well, that's always decided at the reversal point, which at the moment is up here around the 0.75635. But near term, I think the move in the CAD is to get to this area. And then we can see, does this break with momentum? Does this look like just a correction? Or is this starting to fail and rolling over to the downside, which is my base case as it currently stands. Aussie dollar, we've been seeing some near-term strength as the dollar's been selling off. And Aussie has actually been catching a bid because of the China reopening. We're seeing iron ore reflating, copper, and all of this is actually feeding in to the Australian dollar via the balance payment. So I am near-term bullish on the Australian dollar, but I'm also mindful of treating this still as a correction in an overall downtrend as it currently stands. The first time we could consider this for a potential reversal is above the 0.71410. We're then likely to actually get a consolidation before any reversal and then a break high. That would be the bigger reversal. To me, that seems unlikely, as I said, with the overall macro backdrop. What seems most likely to me is if we do get near-term risk on, this continues higher, maybe even retests this, and that's when we start to fail to the downside. And finally, we have the New Zealand dollar. Now, the New Zealand dollar is one of the more important markets, in my opinion, because as a risk-on market, we've seen a huge rally, 17% over 9 weeks in this market. And this was matching only the kind of rally we saw back when we had the large amount of stimulus from the US in the global economy after the COVID crash. So it does tell me upside is limited in the New Zealand dollar. Can it continue higher and test this high? Yes. Can it test the previous high of the overall downtrend? Yes, it can, before failing. And I am currently, as I said, more favoring risk on setup, so I wouldn't be surprised to see either of these happen. But at 17% from the lows, I struggle to see how we can get another 10, 15, 20% out of this to the upside. I do think this is now running out of steam, even though I do think we could see it go a little bit higher near term. Okay, so let's have a look at the best markets heading into next week based on the scorecard data. And crude oil is currently pushing to the upside. This was a market I liked to the downside last week. However, because we are now looking like we're going to get risk on coming into the markets, we could actually see oil reflating a little bit more. So on balance, because of its score in the commodity sector, I do favor downside in crude oil. However, this is not one of my favorite markets next week because of that risk on sentiment potentially reflating this a bit higher before it comes down. So on balance, I would be looking for crude oil down to the 76, 75 area. However, this is not one of my favorite markets and I'd be quite happy just to leave crude oil next week. Next is franc yen. Really nice sell-off in franc yen, and this momentum should precede price. So any pullback in this market, I am looking for a consolidation, a bear flag, and I'm going to be looking for further declines down to the 135.20 area. Next is US dollar yen. This was a market highlighted to the downside last week, and like a number of the markets in last week's video, we don't all have them again this week, but there were a number of markets in this video last week that took out their targets, and US dollar yen was one of them. Heading into this week, I do still favor US dollar yen to the downside, and it actually looks like we have a 1, 2, 3, and we're potentially going to get this fourth wave correction. So I'm looking for this bear flag. Any pullback, I'm looking down towards the 125 area. Next is euro franc. Huge breakout of a recent consolidation, and I am looking further advances to the upside in this market. So any continued pullback, and the deeper the better, as it gives us more of a run to the target. Any pullback would be viewed as an opportunity to look for bullish setups into the 1.0130 area. Euro dollar highlighted to the upside in last week's video. We did take out the target. Coming into this week, any pullback in this market, and I'd like to see this pull back a bit, would be viewed as an opportunity to look for bullish setups. And the target area where once we get to this level, the odds start to turn against you is the 1.0970 area roughly. Next is Aussie franc. Nice momentum to the upside, having started to struggle a little bit at the high. So I do favor further advances in this market. Any pullback this week is simply viewed as an opportunity to look for long positions into the 0.6550 area. And finally, we have Aussie dollar out of the Forex pairs. Now, the Aussie pairs are not my favorite ones. I do favor these four here highlighted in gold. However, I do think that these could offer potential opportunities to the upside. So any pullback in Aussie dollar is viewed next week as an opportunity once again to look for further advances into the 0.7100. Okay, so wrapping up the markets with gold, silver, and Bitcoin, starting with the gold-silver ratio. We did see an outperformance of gold over silver last week, but it is still overall trending to the downside. So I do still favor on balance silver longs over gold longs. However, going into next week, especially with the dollar starting to weaken more, I do favor both gold and silver to the upside once again. Okay, so starting with gold, we did trade into the target area set from last week, and that was pretty much the move in gold last week. Coming into this week, any pullback consolidation is going to be the opportunity intra-week to start to look for bullish setups into the 196500 area. Next is silver. Highlighted as one of my favorite next week. Why? Because it is overall outperforming gold in the bigger picture when we look at the daily chart on the gold-silver ratio. And also it's in a consolidation. So you have to think what comes next. When markets are extended like gold, they're followed by consolidations. When markets are consolidating, they're followed by explosive moves. So I do really like silver going into next week. Any pullback in this market, I am going to be looking for that breakout to the upside. And the profit area is the 25.3 area. And last but not least, we have Bitcoin. Now, Bitcoin absolutely rocketed last week. I did favor Bitcoin to the downside on balance. However, with risk off sentiment coming in, especially post CPI, I do favor risk on going into next week. So still, Bitcoin is not one of my favorite opportunities. However, on balance this week, if you are trading it, I do favor continuation to the upside after such a strong rally. And I would be looking into the 22.150 area. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.